Hey everyone, welcome back to Investment IQ Insights. Looking to build a safe and reliable dividend portfolio in 2025? In this video, we're going over the top 10 stocks that will provide steady and safe income and long-term growth. Before we get started, make sure to subscribe and hit the notification bell so you don't miss out on any future videos about building wealth and achieving financial freedom. We want to remind you that this video is for informational and educational purposes only. Always do your own research and consult with an investment professional before making any investment decisions. Before we dive into the individual stocks, let's take a moment to understand why dividend investing is such a powerful strategy for building passive income and achieving financial security. Dividends are regular payments made by companies to their shareholders, typically on a quarterly basis. These payments can provide a steady stream of income, which can be especially valuable during times of market volatility or economic uncertainty. Dividend investing is not just about the income. It's also about the reliability and growth of that income over time. Companies that consistently pay and increase their dividends tend to have strong balance sheets, stable cash flows, and a commitment to returning value to shareholders. This makes them less risky compared to companies that do not pay dividends. In selecting the 10 stocks for this video, we focused on diversification across various industries and sectors. Diversification helps spread risk and ensures that your income isn't overly dependent on any single industry. We also prioritized companies with strong balance sheets, consistent dividend growth, and reasonable payout ratios. By focusing on these criteria, we aim to build a portfolio that not only provides steady income, but also has the potential for long-term growth. Now that we understand the importance of dividend investing, let's dive into the top 10 dividend stocks for 2025, starting with a tech titan that has been rewarding its shareholders for decades. First up, we have the tech giant Microsoft, ticker MSFT. Microsoft's incredible free cash flow allows them to consistently increase their dividend payments year after year. Their dominance in cloud computing with Azure and other cash cows like Windows, Office, and Xbox generate billions in revenue. Microsoft has increased their dividend for 20 consecutive years and is committed to returning value to shareholders through dividends and share buybacks. Despite being a massive company, Microsoft continues to innovate and expand into new markets. If you're looking for a safe and reliable dividend stock with a proven track record, Microsoft is a solid choice. This is a company built to last, rewarding shareholders along the way. Next up, we've got Broadcom, ticker AVGO, a key player in the semiconductor industry. Broadcom designs and manufactures semiconductors that power everything from smartphones to data centers. They have a strong track record of aggressive dividend growth, often with double-digit increases. Broadcom's diversified product portfolio and strong balance sheet give them a competitive edge. They are committed to returning a significant portion of their free cash flow to shareholders through dividends and share buybacks. If you're looking for a high-yield dividend stock with strong growth potential, Broadcom should be on your radar. Their shareholder-friendly approach makes them a compelling choice for long-term investors. Now let's talk about Procter & Gamble, ticker PG, the company behind iconic brands like Tide, which has been a household name for decades. This company has a rich history of providing quality products that consumers trust and rely on every day. From Crest toothpaste to Gillette razors, PG's portfolio is filled with products that have become staples in homes around the world. These brands are synonymous with reliability and excellence. P&G has over 6 decades of consecutive annual dividend increases, making it a reliable choice for dividend investors. This impressive track record showcases the company's commitment to returning value to its shareholders. While P&G may be a slow-growth company, their consistent profits and steady dividend growth make them a safe investment. Investors looking for stability and long-term growth often turn to P&G for its dependable performance. P&G is a master of innovation, constantly improving products and expanding into new markets. Their research and development efforts ensure that they stay ahead of the competition and continue to meet consumer needs. Their incredible brand recognition ensures continued consumer trust and reliance. PG's products are found in millions of households, making them a dominant player in the consumer staples sector. If you're looking for a blue-chip dividend stock with a rock-solid track record, Procter & Gamble is a top pick. Financial advisors often recommend P&G for its stability and reliable returns. This company is built to last, rewarding shareholders with a steadily growing stream of passive income. PG's commitment to excellence and innovation ensures that it will remain a cornerstone of any dividend-focused investment portfolio for years to come. Up next, we've got PepsiCo, ticker PEP, a beverage and snack giant with a massive portfolio of beloved brands. PepsiCo's resilience makes it a relatively recession-resistant stock, providing steady income regardless of economic conditions. They are investing in healthier options and expanding into new markets, ensuring future growth. PepsiCo's international growth potential and diversified product range reduce risk and provide a long runway for growth. If you're looking for a dividend stock with a fortress balance sheet and a long history of dividend growth, PepsiCo is worth considering. This company is built to weather any storm and continue rewarding shareholders. PepsiCo is a reliable choice for a steady and growing dividend income. Now, let's talk about Johnson & Johnson, ticker J&J, a true dividend king in the healthcare sector. This company has been a stalwart in the industry for decades, consistently delivering value to its shareholders. With over 60 consecutive years of dividend increases, Johnson & Johnson stands out as a beacon of reliability. Their commitment to rewarding shareholders is evident in their impressive track record. Johnson & Johnson's diversification across pharmaceuticals, medical devices, and consumer health products provides multiple avenues for growth. This diversification not only mitigates risk but also opens up numerous opportunities for expansion and innovation. They are investing heavily in research and development, ensuring they stay at the forefront of medical advancements. This commitment to innovation is a key driver of their sustained growth. Driving continued growth with a massive pipeline of new products, Johnson & Johnson is always looking ahead. Their forward-thinking approach ensures a steady stream of new offerings to meet the evolving needs of the market. Johnson & Johnson's rock-solid balance sheet gives them the financial flexibility to invest in growth. This strong financial foundation allows them to take advantage of new opportunities and weather economic downturns, and continue increasing their dividend. Their disciplined financial management ensures that they can keep rewarding their shareholders year after year. If you're looking for a blue-chip dividend king with a long history of dividend growth, Johnson & Johnson is a prime candidate. Their consistent performance makes them a reliable choice for any investor. And a diversified business model, Johnson & Johnson offers stability and growth potential. Their wide range of products ensures they can adapt to changing market conditions. Johnson & Johnson is a no-brainer. Their proven track record and strategic vision make them a standout in the industry. This company is built to last, with a strong foundation and a clear path for future growth, and continue rewarding shareholders for generations. Their long-term vision and commitment to excellence ensure they remain a top choice for investors. Johnson & Johnson is a top choice for a reliable and growing dividend income. Their consistent performance and strategic investments make them a cornerstone of any dividend-focused portfolio. Next up, we have AbbVie, ticker ABV, known for its blockbuster drug Humira and a juicy dividend yield. Despite facing biosimilar competition, AbbVie has built a diversified portfolio of next-generation drugs. AbbVie's high dividend yield and strong track record of dividend growth make it attractive to income-hungry investors. They are committed to returning a significant portion of their profits to shareholders through dividends and share buybacks. If you're looking for a high-yield dividend stock with a strong track record of growth and a shareholder-friendly management team, AbbVie should be on your radar. AbbVie's strategic investments in research and development ensure continued growth. This company is a solid choice for a high yield and growing dividend income. Now let's talk about JP Morgan Chase, ticker JPM, the largest bank in the United States with a global reach. JP Morgan's diversified business model and incredible profitability make it a true blue-chip dividend stock. They have been steadily increasing their dividend for over a decade and are known for massive share buyback programs. JP Morgan's fortress balance sheet and conservative lending approach ensure stability and risk management. If you're looking for a rock-solid dividend stock with a long history of growth and a diversified business model, JP Morgan Chase is worth considering. This financial powerhouse is built to weather economic storms and reward shareholders. JP Morgan Chase is a top choice for a reliable and growing dividend income. Let's talk about United Parcel Service, or UPS, the logistics giant delivering millions of packages daily. UPS's massive global infrastructure gives them a significant competitive advantage. They benefit directly from the continued growth of e-commerce, ensuring future demand for their services. UPS has a long history of dividend growth and is committed to returning value to shareholders. If you're looking for a dividend stock with a wide moat and a growing dividend, UPS is worth considering. This company is built to last and continue delivering for shareholders. UPS is a reliable choice for a steady and growing dividend income. Next up, we've got ExxonMobil, ticker XOM, a cornerstone of the global economy with a long history of dividend growth. Despite the transition to renewable energy, ExxonMobil is investing in lower carbon solutions. They have increased their dividend for over 40 consecutive years, providing consistency for dividend investors. ExxonMobil's fortress balance sheet gives them the financial flexibility to weather any storms. If you're looking for a high-yield dividend stock with a long history of growth and a commitment to navigating the energy transition, ExxonMobil is worth considering. This energy giant is built to last and continue rewarding shareholders. ExxonMobil is a solid choice for a high-yield and growing dividend income. Finally, let's talk about NextEra Energy, ticker NE, the world's largest producer of wind and solar energy. This company has been at the forefront of the renewable energy revolution, setting benchmarks for others to follow. NextEra's incredible growth potential and massive backlog of renewable energy projects ensure strong earnings growth. Their commitment to expanding their renewable energy portfolio is evident in their continuous investments in new projects. They have a long history of dividend growth, with over 25 consecutive years of increases. This track record of consistent dividend hikes makes them a favorite among income-focused investors. Despite trading at a premium valuation, NextEra's high quality and bright future justify the price. Investors are willing to pay a premium for the stability and growth prospects that NextEra offers. If you're looking for a dividend growth stock with a long runway for growth and a commitment to a cleaner energy future, NextEra Energy is worth considering. Their focus on sustainability and innovation positions them well for the future. This company is built to capitalize on the transition to renewable energy and reward shareholders. Their strategic initiatives and forward-thinking approach ensure they remain leaders in the industry. NextEra Energy is a top choice for a reliable and growing dividend income. With their strong financials and commitment to renewable energy, they offer a compelling investment opportunity for those seeking both growth and income. There you have it. Investment IQ Insights' top 10 dividend stocks to start a new, safe, and profitable dividend portfolio in 2025. From tech giants to consumer staples to renewable energy, these companies offer a diversified mix of stability, growth, and juicy dividends. Thank you for watching. If you liked this video and found it helpful, check out our other videos now appearing on the screen. We bet that you'll enjoy them too. Let's keep building that financial freedom together. We'll see you in the next video.